Welcome to the August 24th, 2020 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman with a weekly update designed to be a fast-paced tour. The primary purpose for this YouTube originally was to brief clients on the most important intelligence, trends, and investment strategy combined with this week's news. We began each week with the Dow Jones Industrial Average. By the way, if you subscribe, you'll get a notification over the weekend as soon as the video is uploaded on Friday. Here we go. So, for the Dow, when we look at cumulative return with dividends, getting pretty close to a break even, but that's mainly powered by two companies, Apple, Microsoft, the technology portion of that. Medical is doing well, and I'm going to show you a new report that we're doing, part of the money flows. This is job openings. Now, we look at where job openings are right now. There are 5.9 million jobs posted to be filled. There's jobs available. There are 15 million more jobs to add back in to get to record employment. 9 million were added back in over the 3-month period after the shutdown. May, June, July, the total was 9 million added back in. 15 million to go. Right now there's 5.9 million jobs available. Those rotate out. This is an important number because the first time that we were at this level was actually back in 2016. 2017, it exceeded it, went to 7.5 million, and the current figure, a rebound of about 900,000 more jobs available. That's an important read, and we will brief you on it. What it means is you're going to gradually fill back in those jobs lost. 15 million more to go, 26 million lost, 9 million came in, and this number gives us a read on how soon that will happen. By our current estimates, that would be the end of 2021 to into 2022 for the first opportunity to reach record employment again, 159 million employed, by the way. So that was the record. Anyway, when we look at this is important. Green and red, obvious right here, but I want to take you through money flows during the pandemic and so far this year, right? If we look at the year-to-date money flow, it's out of the S&P 500. This is one of the ETFs, exchange-traded funds, but 27 billion out. The FANG index, that's Facebook, Amazon, Netflix, Google, essentially making up most of the Invesco QQQ trust here. 14 billion flowed in to that one ETF. 11 billion flowed into the high yield bonds. That's important because our global high yield allocations obviously benefit from that money flow. But this is important. Healthcare sector was positive this week, S&P negative. All the money's going into essentially just a few of the overpriced tech stocks. You're probably about to see a shift in that. The medical dividend companies, part of the healthcare, that's something that has been steady, good profit increases. It's a sector that we really like for dividends, and it gives you the money flows right here. Why is this important? In April, 5 billion left the S&P 500. The others were positive. Investors actually stayed the course reasonably well through the pandemic, with the exception of the big money flows out of the S&P, and we'll identify more about the investor behavior. What does it mean? Those that sold out in March, obviously living to regret the decision. We want to own great assets regardless of politics, and we want to own those great assets that pay us real cash flow and harvest them when they're at premium prices or they need to be replaced. And that is the tactical allocation model at McGowan Group. If you want to learn more, go to NetWorthRadio.com, fill out the preliminary client questionnaire, and we've gotten very good at Zoom meetings for those that would like it, because I can take you through more of the research, more in depth on portfolio construction and what we call tactical allocation strategy that pays high cash flow. Those are our objectives here. All right. This is the NASDAQ, all the money flows here. couple of notable other money flows with the pandemic, and I think some of these are about to reverse. Here's Bitcoin, by the way, a low of 4,000 after hitting 20 way back there, and about 12,000. It's pulled back to 11.7. Similarly, gold. So Bitcoin's become an electronic version of gold, if you will, for those that speculate. We don't really do those because they don't pay cash flow if we're in our cash flow allocation models, like allocation units, cash flow units. Our growth units, these are types of things that we monitor and we may add in, but we want to have 20 great companies in the growth units. Gold is not part of the allocation, but I wanted to cover, this was a go-to in July. Part of that is inflation anticipation. And if you want a great inflation hedge, gold was a horrible inflation hedge from 1980 until 2002. And there are long periods of time where it did not correspond to inflation. That's our objection to using gold. Bitcoin, a very special animal, and that we'll do another broadcast just on Bitcoin. It's not something that is part of the core portfolio, but I did want to show you where the money flows are. Interesting, real estate sector. The real estate sector is a -6. Regional banks, a -33. Texas Capital and Comerica, based in Dallas, they're down 40 to 50% so far this year. And the banks have still not taken the write-offs from the defaulted consumer loans and the real estate market. We have a special update this weekend on NetWorthRadio.com. The podcast there, we go in depth for what's actually happening in real estate, residential, office, and other sectors. But it means that the real estate investment trust may have another 30% downside between now and the end of the year. So we're not interested unless we get a bargain point that's either December of 2020 or later in 2021. All right. What's the best inflation hedge? Well, I wanted to cover the update. When we look at oil, 42 made a run for 43 this week, settled back to about 42. But look at this. That's natural gas. Now, $1.40 to $2.32. Reached almost $2.50 per $2.50 per million BTUs to explain that. But if you look at the natural gas market, this tells us a couple of things. Yes, it's a hot winter, so they're firing up the gas plants at full speed to run the air conditioners. But what else is it telling us? The natural gas demand is already restored to pre-pandemic levels based on this chart. That flows through the pipelines, and that's an update that's important. Now, Bank of America came out and said that oil would be back at 60 in the first half of 2021. A $60 price would also mean inflation, and the pipeline energy infrastructure assets could be one of the best inflation hedges. This is the restoration of demand for U.S. oil, which corresponds to what Bank of America said. August of next year projected to be commensurate with 2019 levels for U.S. petroleum and liquid products supplied. And so that says the recovery there well underway. And of course, the EIA has factored in dealing with the coronavirus and what it's done to the global economy. But that restoration, very important for portfolio construction. Thank you for tuning in. This segment was designed, and this broadcast on YouTube, we did originally for our clients, especially for the non-investing spouse. So when a spouse needs education, well, haul them over here to YouTube, send them the link, and it's good for your friends that ask you, well, what do you think? We'll say, well, let's start here. It helps you to educate your family members that want to take the next step in investing expertise. We'll be back next week with the best. I'm Spencer McGowan, President, McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures: value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.